today we're having our third and last interview with Darren, our blockchain advisor, the guy who has been advising Emurgo and advising IOHK from 2011 until 2000, correct me if I'm wrong, 2017.
Well, I've been in the space since 2011. I was advising in 2017. Yeah.
Yeah.
Oh, that's it. Indeed. Correct me.
Yeah.
So, we're actually talking today with Darren about, let's say, the past, present, and just looking kind of like beyond what is expected to become of Cardano within let's say the nearby future and also the distant future, especially with the Cardano Foundation engaging in many of the different, let's say, legal frameworks and making sure that everything is correctly being prepared. Before we get to that, Vasil, our co-host for today, thanks for joining us.
Nice to have me as a co-host, Denisio. I have straight, very tough questions directly for Darren now.
Okay.
And the questions are the following.
Yes.
What is the contract between IOHK and whom till the end of 2020? Is it a contract between IOHK and Cardano Foundation? It is a contract between IOHK and Emurgo? Is it a contract between IOHK and somebody else? Tell me.
I actually don't know the answer to that question. I was mostly working on the outside with IOHK and preparing for the launch, so I think you'd have to ask them. But,
okay.
So, Vasil, basically, you would like to know who contracted IOHK?
Yes, absolutely. And what is the current state of the contract? Because
Well,
as Darren said, I mentioned. Remember, Darren said that before creating Emurgo and creating the name and the brand, everything, already Cardano Foundation was available registered in 2017.
In our previous interview, we did indeed. He did indeed mention that. That's correct.
Yeah, that's right. So these, I think all three entities were existing before I joined in. So that was February of 2017. So that was actually my first day on the project. Was I think it was mid-February. So yeah.
So,
but this is an excellent question to ask when you guys have maybe Charles or Jeremy on the podcast.
Yeah, we're working on that. We're working on that.
Okay.
We are just asking in case if you know, you could say I have signed a non-disclosure agreement not to tell, but you don't say this.
No, I mean this was before my time, so.
Okay. Yeah, you can continue.
Well, there's a lot of stuff that has happened before about Cardano before I joined and also after I finished. So, there's a lot of stuff going on that's really exciting right now that I really don't know. I get to follow it from afar, and I get to see the community grow. I get to see the thing. I joined up with a bunch of the guys in Mongolia earlier this year to see the MOU for tokenization of assets. Well, actually, the MOU is about education, but the talk was actually about tokenization of assets and how that can open a cross-border financing.
Yeah.
Emurgo working on several different education initiatives, and so this is exciting. It's building a base.
Yeah, that's correct. Actually, we will be doing a follow-up at the end of the year with Elipan. Yeah, you're familiar with Elipan, right? From Emurgo, India.
No, never met him.
Okay, he's the guy actually who leads Emurgo India and actually who is making sure that, let's say, the Indian community is well informed, and he's also engaged in education of people and a lot of students and stuff. So he's doing great work. So we'll have a follow-up somewhere in December about the educational program that they started in August.
Okay, cool. That's it's great. It's a base.
Guys, actually, we are connected with Elipan as friends in Google, in Facebook.
Okay, wow. He's really great. I like the way he responds. You know, we have now and again contact, you know, via Twitter, and he's always, let's say, willing to answer the questions, always willing to help, and let's say point me in the correct directions and stuff. So it's yeah, a very great asset. Let's put it that way. Yeah,
Good.
very knowledgeable as well. So
Mhm.
yeah.
Yeah.
But anyhow, hey, just as a note to our viewers, please subscribe. Make sure that, you know, help us grow. We're yeah, we've just passed the 260 subscribers mark, and we're growing. Just, you know, we just started a couple months ago. So thank you very much for everyone who's contributed, and we definitely look forward to continuously working with you. That's it, Darren. Past, present, and future. What's your take?
Oh, thanks. I thought we'd be guiding interviews a little bit. So past, present, and future. Well, I mean, let's talk about the present right now. So it's quite interesting. So I'm in Hong Kong right now. I just finished attending a Hong Kong FinTech Week. It was exciting because the SFC, which is the securities regulator, announced a framework to actually license cryptocurrency and digital asset exchanges in Hong Kong. And actually, one of the interesting things is it covers both cryptocurrency and potentially security tokens. And so this is interesting because where I see a lot of the future and what's taking place is actually in security tokens. So, you know, we saw the kind of the crazy ICO boom in 2017, 2018. But security tokens, it's not. Everyone thinks that it's, you know, everyone in the crypto industry wants to talk about decentralization and disruption. Security token is about, it's about gained efficiency in pen and paper processes. So if you think about, let's say the three of us start a company. Well, we sign a legal document, we put it on pen and paper, and then we track who owns what shares. You know, and let's say, you know, there's 1,000 shares and we want to split it evenly. How do you split, you know, the 333, who gets 334, right?
Yeah.
Or can you split that share? Can you fractionalize it? If we sell it off to someone else, well, these are all legal documents, right?
Mm-hmm.
And so if you imagine, let's say, you know, later on we take this company public, well, someone has to go through and make sure all these legal documents are correct. And there's a joke that says, you know, a cap table, which is a capitalization table, which tracks who owns what in a company, is correct at 2 points. One, when you start, and two, when you go IPO. So the reason is because there's a lot of pen and paper and a lot of legal work and a lot of, not necessarily inaccuracies, but it's difficult to track. So if you turn this into basically a token lay, and you say you issue 1 token per share, then it's much easier to trace. And so if we have our private keys that control these shares, then we can sign. So if you think of, you know, on the cryptography side, you have key pairs, and those key pairs are signing. So if you look at, for example, in Cardano, what do you have? You have a key pair to spend your ADA, and then I believe there's 2 different. You can have a key pair that is delegating and a key pair that is voting. And so these basically are kind of passwords to do 3 different things.
Yeah.
And so, for example, let's say in a corporate contract, you have some shareholders that have voting rights. You have some shareholders that may want to sell to another person. So, in that case, you have to sign, whether it be a legal contract or or a transaction, or a smart contract. You sign it. You know, either you're signing it with your pen and paper signature, or you're signing it with a cryptographic key pair. And this is one way to track ownership. It's also one way to vote. So if you think of even the functionalities of being able to delegate and being able to, you know, vote within the Cardano protocol about how to upgrade it.
Yeah.
Same functionality works in corporate governance. Yeah, and so this is something that is very interesting, that actually a lot of people in traditional finance are looking at right now as not revolutionary, but really you get a lot of efficiency gains, you get a lot of transparency, and actually you cut out a lot of middle and back office processing if you're talking about on the investment banking side, and also on the clearing of securities. So securities clearing, or you might know it as a stock market, when you're trading something, let's say Dionisio, you sell me 100 shares of TCCP coin, right?
Yeah,
if we're trading it on a stock market, that is basically these stock markets, they hold claims to the asset, but I mean, it's not like someone's running around and like you're signing it, you hand it to a courier, they run and they hand it to me, right?
It's not like a physical. It's not. No.
So we also have to know that you own that, and we have to trace the ownership, back in time. We also have to make sure that there are, in securities law, you have transfer restrictions. So, for example, it depends on where you're from, what passport you hold, whether you're on, sanctions list potentially, and so this is traditional securities law, and these things are actually some things that can be baked into a smart contract. That all the functionality works very well, and actually, so the I think on most stock exchanges, actually settling the transaction or finalizing the transaction is T+2 or T+3, which this means after you trade the asset, you actually don't take hold of it until 2 or 3 days later, and depends on the asset, but it can be much more. And so, if you think of an ADA transaction, you sign, and when ADA gets included in the next slot, then it's yours. And so this is much easier. It's much more transparent. It's much faster. So these are why you have more traditional finance players looking at this technology, kind of as not as decentralize everything, but let's make it more efficient.
Yeah.
So early adopters see a lot of promise in what you can do.
But what I think, because I also work within the security exchange, right?
Yeah,
And,
that's right. That's right.
What we I think the main difference basically is the need for an intermediary. I mean, there's no need for an intermediary basically. I mean, like if I want to sell you, let's say a couple of TCCP, in terms of that, let's say the exchange takes place between us, both of us, kind of like off market basically. But I don't need to. I don't need, let's say, Vasil's platform, Vasil INC, let's say, to intermediate for me.
Yeah, I mean the whole finance industry works off of intermediaries, but if you can program some of that, so for example, if we have a smart contract that's using some form of multi-sig and some form of time lock, let's say we agree on something, we agree on a transaction. Well, if we have all the signatures, then it goes to whoever you designate it to, and if not, after a certain time, it reverts back to the original owner. And so this is something that you can actually put into you can code into a smart contract.
Yeah.
But that also brings up all kinds of new issues, because what if someone messes up the contract? Then you could have something lost or frozen forever. So this brings up new opportunities, new challenges, new complications.
Correct. But when you mentioned there the multi-sig, right? I think that's something that's also been considered in the development of Cardano, and the multi-sig functionality. What I've seen is that nowadays there's a lot of talk of custody. Cryptocurrency custody. What do you think? How do you see that happening in the future? I mean, specifically Cardano, because obviously the blockchain is also being developed to have this capability.
Well, I mean, the functionality that we just talked about could be self-custody. So you have a couple of different things. So if you're talking about from the security side or the security tokens, then you're probably going to still have an intermediary. So most of the custodians, they'll have to basically read up on being a custodian, storing, basically creating a hardware wallet, taking keys offline, etc. Right? But there's still a trusted third party. If you have a fully, basically a code-based custodian, then that brings up new challenges. You can be your own custodian, which I think a lot of people choose to do, and a lot of people choose the exchanges that they trade on to be their custodian. So they're actually not holding private keys. So I think a lot of people that are trading on the exchanges actually have never actually never touched a wallet. That's my feeling. So it really depends. You can pick your own. You can choose your own route, and then for Cardano and different smart contract capabilities, you have a lot of people pushing out a lot of DEXs right now. DEX, decentralized exchange, and decentralized exchange is also termed as a non-custodial exchange. The whole reason is, if you think from like a user perspective, you have your hardware wallet, and you never transfer your, your crypto to, a third party, but that transaction is executed when you agree on a price. So that means you can always maintain actually custody of your own keys. So this is actually kind of self-custody or a non-custodial exchange. So these are new features that are not just available in Cardano. There's a lot of people that are building DEXs on other chains, and this is something that I hope that we'll see a lot on Cardano.
Yes.
But this is some. It's kind of right now DEXs and derivatives exchanges are all the rage.
That's correct. At least I know of the decentralized exchange, the DEXs. I know of that because I think about beginning of the year, end of last year, this was kind of like a lot in the news. You've read about a lot of these DEXs. I mean, even Binance, I believe Binance even came out with their Binance DEX. I myself made use of the LA token. LA token is also a DEX. And actually, I'm really curious to see how that will play out in the future. But what I mainly would like to know from you now is about the tokenization, because I know that Emurgo has been working a lot, doing a lot of work, especially when it comes to tokenization. Right? They've even written like lengthy articles just explaining how people will be able to tokenize or use the platform to usher in this let's say ICOs, for instance, or tokenizations.
Yeah, so ICO is interesting because it's a tokenization. Well, Bitcoin's a token, ADA is a token, right? It's just a digital representation, but it's actually not necessarily backing anything, right? So if you think of tokenization from a securities perspective, it's representing an asset, and it could be a physical asset. So you could tokenize a piece of art, you could tokenize, basically tokenize ownership of a company, so it's tracking the cap table. You can create, you can tokenize, a future sale of a very rare shoe, or like a basketball shoe. I think that's quite actually popular in China. So this is like kind of new possibilities. You can tokenize debt, and it's just a way to track it better. Again, it's efficiency gain. It's not decentralization. But it's it's a more efficient mechanism to track, to trade, and when you can track and trade, potentially you can get second market liquidity, you can get better ownership, you can get better examples of you can get more interesting data models. Even you can track the history of IOHK did the partnership with New Balance to track the origin of the Kawhi Leonard basketball shoes, right? And so I was interacting with some people, some Cardano community on Twitter, and they were saying, well, you can, what can you do with this? You can trace that, who was the original owner of the shoe. So that's, it's an interesting application.
But also you can actually track and make sure, check that the shoe that you bought is actually authentic. That it's not, it's a counterfeit or whatever. It is something that actually has been, produced by a legitimate factory that has been appointed by.
So the track and trace is an interesting one, but the other kind of crazy one on top of that is you can now take this token and of ownership, and you can potentially create a futures contract or a futures market. Some early on there was a company called Everledger, and they were doing basically ownership of diamonds. They were tracking basically different characteristics of a diamond, a cut, even the laser engraving, and it was basically a track and trace, which is one of the core or base uses of blockchain. But one of the things is now when you have a digital representation, you can break that representation down, and potentially I can take my one basically maybe it's NFT, a non-fungible token, because it has every diamond is very specific, and I can break that down, and I can tokenize ownership, and I can basically sell off the diamond into multiple parts. I can crowdfund to buy it. I can maybe create a debt. Let's say I want to buy a rare diamond, and I need you guys to help me, so you guys help fund. Then I'll pay you back over time. You sell me back, the portions, and I give you back, some ADA. So you have new financing mechanisms, and even that diamond, that token can be used to create a futures market. So these are other, kind of more out there tools, I guess.
Yeah.
So those are the finance applications.
Darren, could you have any opinion about digital twins technology?
Sorry, the what?
Digital twins.
I'm not so familiar, to be honest.
Okay, great. This will be in the next series when we arrange another three let's say recordings. We will be able to prepare for answering the question about digital twinning and digital twins. This is very interesting.
I'm much better on the finance side than I am on the technical side.
But this is also connected, because we could say that digital twin is the fullest digital representation of the certain asset or a real object.
Okay. Yeah, we'll cover that. I'll have to study up on.
Yeah, quite interesting.
I have to look into that as well. It sounds. Is this a new concept, Vasil, or is this?
There are certain projects already announced. This is a new technology in the last maybe 3 years, but I didn't have time, because this is quite specific, because to make a full digital model of complex system is not very easy,
No. Basically, you're digitalizing.
But they started to do it already. The construction industry already. They initially build the digital model of all the building, and then after that start to build the real one. So we have two twins, two buildings. One digital, with digital twin, and the one, this is the real building, and the digital twin is created before the real object.
Okay,
and then that would be for the tokenization. It would be representative of that asset.
This is very complex, non-fungible token at its best.
So that brings up, I guess, the basic problem, which is how do you prove the token represents the underlying asset, whether it's a physical item, whether it's a company, whether it's a digital twin, and so that is something that actually it's a human or a social problem, that blockchain doesn't solve.
The concept of oracles.
Yes. So the funny thing, funny/crazy thing is, you always have the input of the third party when you're trying to digitize something.
Yes, this is a so-called oracle. And just one thing I wanted to mention, to ask you about the payment channels.
Okay. I think we lost our host.
Yes, somehow, because he sent a message that we are out of time, 5 minutes, maybe he.
Yeah.
So we are talking together with you. This is nice.
Yeah.
Do you have a minute to talk, or you are very busy?
I gotta go. I'm sorry.
Okay, great. So payment channels, Darren, is when we directly in the blockchain make smart contract between you and me without needing other people to know.
Right. Second layer scaling solution.
Like this, and some projects like Eternity included already the basic protocol.
Yeah. We have the lockbox where we take things off chain.
Yeah.
It's some.
Yes, but this is digital twins for you. Also, will be very interesting. Congratulations for the new business.
Thank you very much. Thank you.
Yes,
Have you checked it out?
I saw it in I think in LinkedIn.
Yeah,
and I already liked supporting somehow what I could do. You know.
Okay, well, check it out, the assetnetwork.com. It's basically the Bloomberg terminal for digital assets, primarily focusing on security tokens.
Yes, yes.
So we're actually combining this off-chain and on-chain world. It's primarily, you will see a lot of, tokens for early company equity. We'll see them for debt. We'll see them for real estate. So we do, we provide a portal for a lot of the social legal proofs, the pricing, and then you combine that with the on-chain data, and you can get really potentially rich data sets that can be used to make financial decisions. So
yes.
That's what we're doing.
Very good. Very good. I wish you a very, very harmonious development.
Thank you very much. Thank you.
And great success.
Thank you.
Okay.
Okay. See
Bye.
you.
Bye, Darren.